I want to welcome Steve Penny, who runs the Silver Chartist newsletter, which has benefited me greatly, and you can find it at thesilverchartistnation.com. Welcome, Steve.
Hey, Elliot, thank you so much for inviting me back.
I'm really excited to have you back because you've been sending out a lot of alerts, and as a member, I've really appreciated what you've sent out. And I wanted to take this opportunity to kind of pick your brain on some of the actions you've taken with your portfolio.
Absolutely. Sounds great.
Great. So I noticed, first of all, it just struck me that you were in Denison Mines at 41 cents. That is so low. You're killing it in that. Can you just talk about why you like that one in particular and if you plan on holding it?
Sure. There's so much leverage to be had just in the uranium sector as a whole. And, some people prefer the more even smaller cap names that probably will outperform. But I like the larger cap names in very safe jurisdictions. I mean, I've got some more high risk speculations, but Denison is up there in the Athabasca region in Canada, so it's a safe jurisdiction. They've got a large deposit, the Wheeler River deposit, good management team. So Denison is one of the quote unquote safer ways to play the uranium sector, and there's plenty of leverage built in there. So really like Denison.
Yeah, and I spoke to Rick Rule, and he said he's just so impressed with the management at Denison. He just is the A+ management team. And so do you just expect to hold it from here on out, even though it's run up quite a bit?
I do, yeah. So I'll throw out the caveat. I did take my initial money off the table. The whole uranium portfolio I had was up several fold, 300 or 400%. So just prudent risk management for me. I like to just take my initial money off the table, even though I think the sector is going much higher. But now that I've done that, yeah, I'm going to hold. And now it's all about long-term exit strategy for me in the uranium sector.
Great. So now you're playing with the house's money.
Yep.
that's ideal. And yeah, you got in nice and early. So should do well, right? No, zero risk at this point.
Mm-hmm.
All right. And then another one I saw you got in early was Uranium Energy Corp, UEC. I think your cost basis is 79 cents, which is another great one. I don't know how you got in so early, but why do you like that one? And do you plan on holding it?
I do. I mean, it's one of the, I guess you could say, four big U.S. uranium miners. You've got Energy Fuels, UR Energy, UEC, and then Encore now is, going to be a producer pretty soon. So those are the four U.S. plays. With the U.S. building their strategic uranium reserve, I think UEC stands to benefit. And a lot of people criticize UEC because of the management has they paid themselves a pretty high salary in the depths of the bear market. But I'm in this to make money, and I think UEC will do really well. They've got in situ recovery at and they can turn on their production pretty quick, and I think they're going to benefit during this bull market.
Yeah, and you're playing with the house's money on that too.
I am, yeah.
So what was the thought process on getting into these so early? Like you must have gotten in when absolutely no one else wanted them. And can you just help give people advice on how the audience can get into other positions this early? I mean, because it's always hard to do that when the prices are that depressed.
It is. And, there was a little bit of luck involved, but, you do have to have the conviction to buy when everyone is selling. So I built most of my positions last March and April during that panic-driven sell-off around coronavirus when that was all new and the stock market was selling off. And it just so happened I normally don't keep that much cash, but I just made some moves and had a decent amount of cash. So I was in a fortunate position to be able to scoop up these bargains. But yeah, I mean, everyone at the time, people thought it was going to zero. These stocks were just trading at such low valuations. They were just beaten down to a pulp. And so that's when I like to buy, and that's my sweet spot, buying when everyone else is selling. And then I like to sell when everyone else is buying.
Right. So you don't even listen to the headlines or anything, right? Because obviously there's so much fear in all the headlines. It's kind of designed so you don't buy at that moment. So how do you just kind of block that out? Because there's always a really good reason not to buy, at the bottom of the COVID crisis, right?
Mm-hmm. Yeah. This took me a long time to learn. I made plenty of mistakes over the years. I've been at this for almost 15 years now. And, I made plenty of mistakes, but it wasn't until about, maybe 2015 or so that I really got into technical analysis and just immersed myself in learning that skill. And I like price and volume because it tunes out all the noise. And to me, price and volume on a chart have more information density than, reading any big long report or everyone's opinions and people arguing. Just price and volume overlaid on a chart give me more information. then that's my primary source of information for when to buy and sell.
Yeah, and I think that's your competitive advantage and why people have benefited so greatly from your service, because your timing is just like really, really on point. For, a lot of people unfortunately couldn't get in, when you did for a lot of your positions. But I mean, obviously, if we follow your newsletter, you'll let us know kind of when you're buying so we could follow along. But for someone that is looking at it now and things, I think they're getting at all-time highs, at least, or maybe last 5-year highs is where they are.
Mm-hmm.
What advice do you have? Do you have kind of like an idea to like scale in slowly over time?
Yes. And so we're still talking specifically about uranium, correct?
Yeah.
Not so much silver miners. Okay.
Right.
Yeah. So uranium miners, they've run really far, really fast. So, it's not like we're buying when there's blood in the streets and everyone's panicking. However, I do think we're early innings in this bull market. If you've got a longer term time horizon, I mean, that spot price, the bottom line, that's price of uranium has to get to $50 at least. I mean, it's probably going to go much higher than that. And we're still down around $30. $30 is not enough to incentivize the new production that's needed to bring on all these nuclear reactors around the world. And there's only about 65 pure play uranium miners in the world globally. So it's a very small sector. And, these companies are going to need higher prices. So we're still early innings, but I think scaling in on weakness over time. I've been telling our members, if I were just building a portfolio right now, I would take partial positions and keep some cash available for the inevitable pullback. This is a volatile sector, extremely volatile, even more so than silver miners. So you're going to see pullbacks.
Yeah, I think it makes sense to buy on weakness, right? Like, which is what your kind of specialty is. So could you talk about just looking at silver miners too, right? So you obviously have incredible low cost bases in some of the silver miners too. Can you talk about kind of how you were able to get into some of those so early? You mentioned a little before the call about like kind of the madness that was surrounding your trade in this.
Yeah, I was pretty fortunate that I had cash available during that. A lot of your listeners will remember, I think it was March 16th, if I remember correctly, the exact day that silver like plummeted. It was a Monday morning down to like 11 or $12 in the futures market. I mean, there was just peak panic. And I had the week before, I like to study ratios very closely. So I saw like gold was extremely overvalued relative to the junior silver miners. Like that ratio had never been so extreme. So the week before I had sold some gold, physical gold. So now I had cash to deploy on that pullback. So it was really, some luck involved there with the timing. But that's how I got in at the low cost basis. So there's some luck involved. I don't want to sound like I'm some kind of, like brilliant investor or anything. I mean, I look at the charts. I want to have some humility there. I don't want to pretend
Right.
like I can do that every time. Yeah.
Right. I do appreciate how you do look at the ratios.
Yeah.
So, and you actually sent out a note recently about how silver currently today is undervalued compared to other assets. So could you talk a little bit about what makes you say that?
Yes. Bottom line is silver is the only commodity on the planet that I know of, at least, that's still trading below its 1980 high. Silver was almost $50, $49 in 1980, and here we are down at $28 and change. So it's not only is it the only commodity that's below where it was in 1980. I mean, it's almost half of where it was back in 1980. And think of all the currency that's been created since then. So I mean, silver is just a tiny market, ridiculously undervalued. The industrial demand and uses for silver are just increasing as the world goes towards electric vehicles, and previously third world countries are getting access to their electrical grid. So there's industrial demand, but really it's the investor demand that's going to drive the silver prices higher. And we see the general public slowly waking up to this opportunity here. And we're seeing that reflected in high premiums and demand for physical. And, we're seeing the price trend higher as well.
Yeah, no, that's correct. And that's the hardest part of the silver market to kind of forecast is investor demand. But you seem very bullish on the fact that investor demand is just going to kind of really pick up from here. And it makes sense because they've been printing so much money, but they've also been able to stifle the price for so long, right? So the question is like, how long will they be able to do that? I know it's the $1 million question, but I mean, do you think that they'll be able to continue to do that? Or do you think the investor demand will just overcome that soon?
Yeah, I mean, predicting the timing of when this manipulation ends, it's very difficult. I mean, obviously, I've been way early. 10 years ago, I never would have envisioned this going on this long. I would have thought no way. But I take solace in the fact then that throughout really all of recorded history, going back thousands of years, silver and gold have benefited from this exact kind of environment. And silver and gold have never failed to do a full accounting for the expansion of debt-based fiat currency. So empires throughout, millennia past, they do these same things. They expand militarily, they expand their social programs beyond what the tax base can support. Then they dilute their currency, and eventually silver and gold do a full reckoning for that. And I have no doubt that this time will be different. And so I'm comfortable holding as long as it takes. I don't think it's going to take that much longer, but I'm very confident that it's going to happen.
That's right. So you're not really timing the market, but you are taking advantage of weakness in the market on dips and you're buying, right?
Absolutely. Yeah. I like to say fundamentals tell me what to buy. Technicals tell me when to buy and when to sell. So I use the charts for those precision entries and exits.
Great. So there's actually, currently there's a big debate raging about whether or not gold is going to break out from here, or if it's a head fake and kind of a bull trap. And, we've been in a down channel for the last few months. Gold's finally picking up a little bit. What are you seeing in the charts right now? That's an indicator of what could happen.
So going back to August of last year, we've been watching very closely this clear downtrend channel in gold. I mean, it's like textbook. You might call it a bull flag pattern. And I've been saying for months, like the big line to get above, we can't get too excited until we get above the upper rail of that downtrend channel. Well, that happened this month. And so that's a clean breakout. Now, whenever we get a breakout on the charts, technical breakout, my eyes come down to the bottom of the chart and I look for volume to confirm. And this is happening on above average volume. So this is showing big money institutions are also seeing this breakout. So what tends to happen here is, that's a breakout. So I think we're resuming the uptrend. Now, of course, nothing goes straight up. So we are due for a little bit of a pullback here, but I'm looking for higher highs and higher lows going forward. I think that's certainly the path of least resistance. That's the most likely outcome.
Right. Hey, that's fair. So it's broken out of a channel and high volume. I mean, every indicator means that's bullish essentially, right?
Yeah, absolutely. And what's also bullish is the order that this is happening. So you can break the precious metals complex down into 6 subcomponents. So you've got like senior gold miners, senior silver miners, junior gold miners, junior silver miners, and then the physical. So what happens is that typically big money goes towards, the large cap gold miners first. That's where institutions invest. So what happened? We saw GDX break out first, and then gold followed. And now GDXJ followed suit after that. So now I'm looking for silver and silver miners to confirm a breakout above their overhead resistance as well.
Yeah, and the silver miners are really interesting right now because like SILJ, right? That's been in a channel, like just a trend. It's been flat. Like obviously it spiked after COVID, but it's just been flat for a long time. And it just seems like it's finally reaching a new high. What is your thought on that chart?
Yeah, SILJ, you described it perfectly. We have seen a slight series of higher lows dating back to, I'm just looking at the chart here, September of 2020. So we have seen higher lows, but the big resistance, we're testing it right now. And it's right there between $17 and $17.65. And I mean, we're literally like right there today. There is a little bit of resistance above that because we got to 1884 on the first silver squeeze on February 1st. But really that clear resistance is right there. So we're testing it today. That said, I mean, we're not quite overbought yet, so we could punch through it, but I also wouldn't be surprised to see a little bit of backing and filling here. But regardless, I think we're close to a breakout, and getting above that resistance will likely signal a resumption of the uptrend.
Yeah. So do you think there's just a large base of support for SILJ because it's been in that tight range for so long? Like has the spring just been coiling and coiling, and now it's poking its head out a little bit, and it could correct. But you think that if it breaks out, is that just a really, really bullish sign at that point?
It sure is. And a lot of people, like myself included, I like to buy dips, right? But if I were just building a position, building a portfolio, and I had a lot of cash available, there's nothing wrong with buying the breakout either. I'm not saying put all of your capital to work, but if you got all this cash and no position, I would buy that breakout and then keep some cash available in case it's a fake out move, which I wouldn't expect, but nothing wrong with buying a breakout either.
And then so my other question, which was really interesting, because you sent out an alert about one of your trades, which I was surprised to see you in, but hey, I guess you had a good reason for it. Riot blockchain. You tend to stay in the hard asset sectors, but what did you see? Because you did really well in this trade. So what did you see that caused you to go in on Riot blockchain, and how did that trade turn out for you?
Yeah. So, I'm laser focused on silver, uranium, and gold. But when it comes to trading, I mean, I like to trade other assets as well. Like if there's not a compelling setup with silver, uranium, and gold, I'm more than willing to look elsewhere. And, I don't really have an opinion on Bitcoin. I don't own Bitcoin. I have nothing against Bitcoin, but I mean, it's sold off like 50% from its high. So it was due for a little snapback rally here. And what's interesting about Riot blockchain, going back to last week, it had pulled back really sharply from like $80 at its high to like 20 or so. And it was sitting right above its 200-day moving average. So without even making a prediction, that gave me an asymmetric setup where, I put my stop loss right below that support. So if I'm wrong, I get stopped out for a small loss, but it's got all this upside. So with trading, it's less about predicting and more about managing risk and finding a symmetry around very clear support and resistance levels. So that one worked out well this week. Yeah, we're up like 15% or so before I got stopped out.
Yeah, no, I love that. I love how you're just, if you see blood in the streets, you just can't help yourself.
Right.
You have to take advantage of it no matter what the asset is, right?
Yeah, exactly. Yeah. If anything falls, 70, 80% or whatever, 50, 60% in a few weeks, I mean, that's going to catch my attention because there's usually some kind of opportunity for a snapback.
Yeah. So anyone who followed you into that did really well as well. So appreciate that. Well, that kind of, I mean, thank you for sharing your recent portfolio moves and some of your insights. Is there anything else you just wanted to share with our community before we wrap up?
I could talk for hours about silver, uranium, and gold. Before I had this newsletter and started posting publicly, I was always talking to my friends and coworkers about it, and they didn't necessarily want to hear this. So it's nice to have, like-minded people to connect with. So I could talk for hours, but really nothing jumps out that that I'd like to share with anyone. I would just, I guess, reiterate that these look like very real breakouts in gold and gold miners. Nothing goes straight up, but I do believe the trend has changed, and I expect higher highs and higher lows going forward.
Yeah, there's so much FUD, right? So fear, uncertainty, and doubt around these sectors. People think that Bitcoin's going to replace it, and just all kinds of reasons. I think that the sentiment is really bearish right now, which is actually a good sign, right?
Yeah, agreed, 100%.
Yeah, so that's great. So obviously people should sign up for your free newsletter, but where can people go to get that and learn more from you?
Sure. Yeah, we do have a website, but as a thank you for inviting me on, I set up a link just for your listeners. It's free. It's a free letter, and I believe it's silverchartisnation.com. Yeah, so silverchartisnation.com. That's where you can get the free Silver Chartist report. Goes out every Sunday. We're going to take a little break this weekend for Memorial Day, just giving the team a break, but we will put out some content on Sunday. But it goes out every Sunday. It's free. We don't spam you. We try to provide a ton of value for free. And then, of course, there's the option to upgrade to a low-ticket premium service where you get the real-time alerts and the over-the-shoulder service.
This discussion is for informational purposes only. Nothing in this discussion should be taken as investment advice. Guests are not compensated for their appearance. Do not base any investment decisions on the information presented.